Okay, good morning. So I just put on this, it's a little bit tricky this morning. So I just put here the two charts. You have here the Euro USD chart and you have here the DXY chart. So you see the DXY is blocked, has been blocked with this big 21 for fib. We were still expecting to see something up to 92.50. We didn't. So we are blocked here yesterday, and now we are blocked by this 1140 fib, which is the fib of this move up. So the 1140 fib is, for me, the barrier of the trend. So it means till we stay under it, the trend is still alive, this trend down. When we will break and close above it and stay above it, then the trend could be turning. So I wanted to show you both charts at the same time because you see here we have this kind of small support here that is done, but the most important is not this support and this fib is important, but what we have here is the neckline. So you have here the neckline of the head and shoulder pattern. You see the neckline here. So we have the neckline. Each time we went to this neckline since yesterday, we have been sold, but we can't find momentum. I adjusted this ABC from this low to this low. So if you do that, you will see that the 236 is right there. And that's right where we are stopping, which is at the same time more or less this area of support. So you see that's something really tricky to know at that time who is or what is stopping or controlling the price. What you know and what you can understand easily is that this 236 here is the equivalent at this 1140 fib here. So that's what is maintaining the price lower on DXY and maintaining the price higher on Euro USD. Higher is the way to say it, but making it bounce and here making it pull back. On the other side, the neckline here on the top here is more or less this area. So what it will be important if we want to see a move down here or further, which is what I think we could see today, to trap people always getting long at a certain time. I don't know when it can happen. We can first run higher, which would be run lower here, and then perhaps again to this low, or even post a double bottom here on the initial lows here on the Euro USD. I hope you can see it on the chart. So one possibility is we break this ABC completely. We have respected it yesterday since we didn't really broke the initial level that was here. So we have had a kind, I would say, just a kind of small double bottom here, yes, double bottom here. So as soon as we keep that intact, we can still run higher. As when we would break that completely, then we will probably and surely see again this area, or we could go lower, but we have the level on the other chart. I will post them later. So it's really tricky. If we go lower here, it means we will retest the 23.6 area, very important fib area that we have seen since last weeks, and you know why it is here. It's the one that stopped the price on the left a long time ago in several occasions. We can see there it was even before this spike, which is this area. Okay, so that's where we stop first with that 2360 feet. So now all is about what happens here. We can see that as a bull flag and run higher. We can see that as a small bear flag and run lower. So it's unclear. It's difficult to trade. You can just play this small range, as I said, from now, from 119.04, 119.05 to this very clear place here, 118.94, 95. very tight stop. That's what I did, not paying a lot, but at least we can do something, and at least we are in. Now I am long from here, and I put a little bit more size, because if we go up, as I still think it can happen, we could break back above this neckline and run higher, and that would trap a lot of people that are trying to get long USD, so they would try to get long on this move, which would be a move down of DXY, and they would be taken out each time. And if that would happen on today close, end of month, we could see this lower area. That is what we have been waiting for, where we have the 200 DMA. 200 DMA is here, but we have a very important fib here, 91.31, and which is the 38.2 of the impulsive move up, and that would be a good place to bounce from. And that's what I'm looking at. On the last thing I wanted to clear again is we have this very nice formation here with a kind of double bottom that didn't follow Euro USD, that hasn't made new highs when we made this low here, and there was not new lows, but we have something that could be a bottom in place. So whenever, if we come back in this area, the reaction here will be very important to look at, because it could just hold due to the fact that we have this formation here. For now, we stay with this thing till we break in any direction. It can break lower, it can break higher and come back up here till we respect that 236 fib. We are, I would say, we are still in place with this ABC up, and then we would land around this 195 area, that is the 1-to-1, then the 1970 or the 1999 around 120, which is still the same area we have been looking. We have here the 200 DMA, we have a lot of things. So it's a little bit quick video, just wanted to update that. And if you don't feel comfortable, you just stay away and wait that this thing is done, because it will be tricky the whole day, I think. Same thing for gold, whatever DXY does, gold will follow. You know why? As soon as something is priced in USD and USD is stronger, the value in USD is lower. It's very easy. If a car cost is priced in USD and the USD is going higher, the price, the real price of the car will be lower in USD. But so that's logical. DXY up, gold down. DXY down, gold up. Very simple. And that's why we say gold is not really gaining in value. It's more the USD that has been losing is real value on the market. But that's another discussion. Okay, so I hope that helps. You have some levels here. The red one are this ABC up. The blue one are the ABC down. And we saw before we moved, we had stopped right on this ABC here at 1272 extension. So let's look who is gaining the fight this morning and what will happen. I hope we won't stay in this range for the whole morning. That would be really boring.